and welcome to the Weekly Market View. I'm here with Bill this week. He's back. How are you, Bill?
I'm very well, enjoying this lovely grey weather.
Lovely, yeah, as always. So this week we've seen stock markets rally, particularly in the US. We've seen record highs for the Dow and also the S&P making highs. What do you sort of see as the contributing factors to this?
Well, I think one of the things that you've got to, really look at is when we have the flight to quality, flight to safety, 18 months, 2-3 years ago, into the bond markets, we brought bond yields down so low that everybody said, well, we can't go any lower. And also, if you looked at, some of the mutual funds, especially the money market funds in the States, in late third, early fourth quarter of last year, it was anywhere from like $26 to $30 billion that was getting a negative return. So you've seen that, and also maybe we've reached the point, hopefully, that we've had so much bad news for so many years. Now it's a question of risk on, risk off. But one of the things that I think is quite interesting, especially here, with the FTSE, is if you look at the first 7 years of the new millennium, you had 7 or 8 stocks that were like 70% of the move. We're talking about the Fresnillos, the Cairn Energies, the Vedantas, the oil and commodity related stocks. Well, they have been the real laggards recently. Now, I guess the feeling being is, if they start to improve, how high is high? And I'm very positive on global indices.
Yeah, we also saw the Fed minutes out yesterday from the US.
Very early, if we remember.
Yes, very early. Yeah, there's a speculation on a bit of who got them released early.
What happened was they sent them to Congress, and the lobbyists got hold of them about 12 hours before they were supposed to be released. So that was quite an interesting move.
Yeah, some say it might have actually helped out, or it might be worth the while the Fed releasing them earlier.
Well, no, they're not supposed to.
Yeah.
This was just one of those accidents.
Yeah, but maybe like changing the time from the afternoon.
No, they didn't change the time. Basically, what happened was it was sent to certain lobbyists in Congress, and I guess they just didn't put on the. You receive something if you work in the newspaper. It's I want to say quarantine. That's the wrong word, and it was not supposed to come out till 7 o'clock last night.
So we saw them talking about sort of discussing a bit more about the QE tapering off as a speculation on when that might happen. When do you sort of see it playing out?
I have not changed my philosophy. I'm still looking at mid to late 2014. And I think one of the things where they're talking about tapering it off is that I think too many people are anticipating, for the simple fact is, it looks like Bernanke will retire on the 31st of January next year, okay? And he is the archdove, so they're feeling that if he moves, then some of the hawks would go in. But I think, they've already told us until unemployment gets to 6.5%, we still got quite a long way to go there. And inflation reaches 2.5, we got a really long way to go there. I don't see any move at all, and if you look at Fed fund futures, they're not anticipating any either increase in Fed funds or tapering off, that's the new word, again, until probably the middle of next year.
We had Bank of Japan, they proposed their sort of stimulus last week and we saw it come into effect on Monday.
Yes.
We've seen a massive weakening in the yen, so rallying dollar yen and also the euro yen hitting 3-4 year highs. Do you think that this is sort of an ongoing trend? Do you think the yen's got further to weaken?
Yes, it does. I mean, well before you were born, it's almost, it was the 13th of April, 2003, okay? We got to 130. So, I don't know whether it's 100, 103, 110. Yes, it will be. I think what they've done is this quantitative easing basically has made, yen a no-go trade probably for the next 2 years. And we're seeing that not so much in the foreign exchange market, but as you were talking about earlier, the global bond markets has been, wow.
Yeah, we're seeing in the Eurozone sort of periphery nations, we've seen good demand for their bonds, so bringing the yields right down, despite sort of the bad days we're still having, or no government in Italy, for example.
Is that any different than it has been since the Second World War?
But the yields and the good demand for them. What do you think is the cause of it? Do you think it's linked to Japan?
Well, I think it is, because one of the things, just this week alone, we had record lows in 10-year notes in Poland, the Czech Republic, Mexico, and South Africa. Last week, even with this, doom and gloom, here come the rockets from North Korea, we had an all-time low both in the Philippines and South Korea. And I think one of the things that we're seeing now is, if you look at if you want to talk about some of the peripheral companies, we're seeing Japanese pension funds in the last 6 weeks have increased Turkish lira bonds by 24%. Okay, so we're seeing a massive move in here. We're seeing record yields, low yields in Germany, record low yields in France. We had a massively successful Italian bond auction today, and I think one of the things, and I feel sorry for our friends in Cyprus, but a month ago we were worried about contagion. What contagion? Yeah. The euro's rallying, bonds are rallying, stock markets are rallying.
Yeah. And like when we look to the UK, the stock markets are a bullish trend starting in the FTSE. Do you think that this is going to set to continue, and do you think it will challenge sort of the high of the last 5 years that we saw?
Yeah, I think it will, because I think we're basing it from a more solid base. And we were talking earlier, like you had 7 or 8 companies that were 70% of the movement in the FTSE in the first 5 or 6 years of this millennium. The Vedantas, the Fresnillos, the Cairn Energies, the energy, commodity-related stocks. Well, they've been the real laggards. So if we start seeing a move in those, it's like how high is high. And one of the things, though, albeit I know the people who felt that the stock market was ready to sell off. It was, a lot of the stocks that were moving were the IT stocks. And again, to remember the dot-com boom. But it hasn't stopped. Also, we're seeing health-related stocks. Now we're starting to see even the airline stocks are starting to move if petrol prices continue to go down. And, I mean, what can you say about, automobile stocks and even bank stocks in the U.S.?
Yeah, it's really something to watch out for.
Yeah.
Okay. Well, thanks for that, Bill. And
Thank
we'll see
you
you next week.